Good day, my name is Christelle from France de Klerk Independent Technical Analysts. Vishnu wanted us to kick off the show with Tongaat Hewlett. Vishnu, your first warning was here in January 2018 when the share could not keep the 40-week moving average, which is represented by that red line, when it could not keep it as support. It tested it for 2 consecutive weeks here in February, could not change it into a support, and ever since then just started to making lower lows and plummeted to lower levels. But the share is now at an interesting level. It bounced and pulled back, and now the big test is, will it find enough support, and very important, support higher than the support here at R4.87 and hopefully even higher than R1.85. So at some stage the share needs to find support and bounce, and should the share manage to change this resistance waiting there at R9.60 into a support, the next higher low will be confirmed, and that will be seen as very positive for Tongaat. You might say, Christelle, this is about 41% from that entry level. Can you not give me a better level to enter? So what you can do, Vishnu, is you can maybe use the previous candle's high as a possible entry level, and that is waiting at R7.38. But keep in mind there is not a turnaround candle or a pattern yet, so you would purely buy on the hope that there is enough buyers to change that resistance into a support. Obviously, as I said, R9.80, a critical level that needs to change into a support, but you can use that R7.38, which is the high of last week's candle, as an entry level, and stop loss that you can use is this R4.62 level to enter into Tongaat. And important, or what is always nice for technical analysts, is there's a window there. There's a gap that it closes at R13.19, a gap there on the graph that can act as a possible target. Because the rules around windows are they always get closed, but it can take days, weeks, months, or however long. But when that window closes, maybe you can see a little bit of resistance, or what sometimes happens is at the window, the confidence levels of the buyers are so high that they continue to accumulate, and then the momentum drives the share to higher levels. It's such a thin share, but what I mean by that is in terms of volume. So maybe I would ignore the stochastic indicator at this stage and maybe look for the price action in the candles to direct me and, channel my thoughts into whether this is maybe a possible opportunity or whether I should rather sit on my hands. Nick wanted us to look at Telkom. And he asked the question whether there is a bearish flag formation visible. So I first looked at the line graph, Nick, but then I could not have, there wasn't enough touching points. I wanted stronger support and resistance lines. In other words, I wanted at least 3 touching points. So I changed it to a candle graph. And there I could easily see my upper band of my descending channel had 1, 2, 3, 4 touching points, and I do not count a line when it pierces through a real body or a shadow. I only count the points that touches either the shadow or the real body. So I've got a strong upper band there, and I've got a strong lower band there at the moment. So with this descending channel, only if this lower band changes into a resistance will you have a bearish flag. Bearish flag. So what happens is the bearish flag is a negative formation, acts as a continuation pattern, which tells me that if the momentum to the bottom continues, I had a small pause, and when this lower band should change into a resistance, the overall momentum can even decline further, which means these support levels at 13.28 and 15.37 can change into resistance levels. However, if this upper band, waiting there at R19.72 on Telkom, changes into a support, it means that it might be the spark to turn this share around for higher levels. But obviously let me give you that exact level. 1980 entry level, stop loss you can use is 17.24 as a possible trade for this Telkom graph. And have a look, it's coming from such low levels that if you've got a long-term view, we know from a fundamental perspective there's a lot of things that needs to be resolved, but for a long-term view, should this high there at 1980 remains a support, this channel might be a turnaround pattern for Telkom. Kevin wanted us to look at PPC. Now, interesting enough, Kevin, if I change again this to a line graph, you'll see that the share is making new lows. It's plummeting to lower levels for whatever reason. There's more sellers. There's only two things that can move a price. It's more buyers or more sellers. And if there are more sellers, the price plummets. No matter whether it's a share, an ETF, or even your house. If there are more sellers around, the price declines. And that is inevitable on PPC. You can see that when that support, which waits at 1 Rand, changed into a resistance, it is as if the sellers just came in and sold the share even lower. So one or two things needs to happen now. At some stage, the share needs to find support and start making higher lows. And higher lows is basically a pullback, a bounce, a pullback. And that pullback at some support stage, wherever that is, that support level should be higher than the previous support. And if the instrument then starts to rise again, when that previous resistance changes into a support, that's when your next higher low can be confirmed. Now, in a line graph, obviously, it's the closing prices. On a candle, it can be the wicks or the shadows of the candles. So wait for the higher lows, because what that inevitably will say is that people are buying the dips. So even if the share declines, that there are buyers there that are supporting the share to lift it to higher levels. I don't see that at the moment on Telkom. So at the moment, I would rather sit on my hands. There was the possibility, and I think everybody hold their breath, they're around 1 Rand to see, will this leg, this pullback, find enough buyers to keep the support there? Because if it could, and it's bounced from there, I could have had a double bottom there because I had 2 trouts there. But now that was not the case, and the share plummeted to lower levels. So the big, massive resistance that needs to be overcome on PPC is only at 1 Rand 70. So you can maybe use these resistance levels at 93 cents and 1 Rand 25 as possible levels that needs to change into a support before you can be optimistic about PPC. At the moment, it's very negative. Downside, I would wait for higher lows before I enter into the position, or wait for these resistances to change into a support to accumulate this share. And obviously, you can look at your candle graph to see if there is turnaround candles. Dragonfly, a tweezer bottom, some sort of indication that the buyers are coming in to support this share. Omnia. We've mentioned before that Omnia had a head and shoulder formation, and again, a head and shoulder formation was a warning pattern that warned investors, be careful that you can maybe see lower levels. And the head and shoulder was actually quite clear, with a left shoulder, a massive head, and then the right shoulder. And when that neckline changed into resistance, the formation was confirmed. And the conservative target of Omnia was already reached. But the full target of the formation is the length of the head from the top to its neckline, projected downwards from where the formation was confirmed, which means the full target of this head and shoulder formation on Omnia can take the share back to 9 Rand 20. It doesn't mean it will go there. It's just a possible target for a formation. And double tops, triple tops, head and shoulder formations are all warning patterns that should not be ignored. So the big test is, when will Omnia start to turn around? And only when this neckline waiting there at 21 Rand 94 starts to change into a support will I maybe take a sigh of relief. But the negativity and the pessimism around this head and shoulder formation will only be wiped off the table when either the right or the left shoulder changes into a support. In other words, only when the share starts to consolidate above 31 Rand and 8 cent will the negativity around this head and shoulder formation on Omnia become obsolete, and that is even higher than this 40-week moving average. And for our usual listeners, they'll know that the 40-week moving average is that critical line for long-term investors. Above it, the long-term sentiment towards the instrument changes to positive, and below it, it remains negative. So that 40-week moving average, it's waiting at 27 Rand 50. So your resistance levels are obviously the right shoulder, which is the first one, 25.28, that needs to change into a support, and then 27 Rand 50, and then that left shoulder that is waiting at 31 Rand and 8 cents. That needs to change into a support on Omnia before we can maybe see a little bit of optimism and think that this share might be on the turnaround. Cref wanted us to look at Richemont. luxurious good company with a lot of uncertainty. And I want to go back to a candle graph because then my line is a little bit stronger on the bottom side and there's more touching points. Greg, you can see that again, like in Telkom's case, I'm sitting here with a descending channel. So should this lower band changes into a resistance and the shares, and you can even extend it because you can project that level to maybe 92.42. Should that level change into a resistance, the possible optimism around that descending channel becomes obsolete and is wiped off the table. But if the share, and this is Richemont, can change this upper band, and if I project it around 102 Rand 89, if the share can change that level into a support, you can maybe see a turnaround pattern, the descending channel will be confirmed, and you can see higher level. What is the target of the descending channel? It's the width of the channel projected upwards from where it is confirmed, more or less, and that means this channel can take Richemont to 114 Rand 30 again. Your big test will be the 40-week moving average, waiting at 107.85, and you can see there, Crave, time and time again, the share tested the 40-week, could not keep it as a support. It broke through it 1 week, fantastic, but again, the next week plummeted to lower levels, and again here. So don't ignore the 40-week moving average on Richemont. It's a clear resistance or support to see what the long-term investors think about it and what the sentiment towards this share is. Critical level to watch out for is the 102 Rand 89, because above that level, the optimism of the channel will be confirmed. But below 94 Rand 21 and 93 Rand 35, I will be concerned about Richemont again. And obviously, you know that Richemont prefers a weaker Rand. So with the Rand strengthening again, it might just, put some pressure on the share price. Jackson wanted us to look at the Purple Group, ticker PPE, listed on our JSE, and Jackson, I have to change this into a line graph because the shadows, is so long, and again, the share is so thin that because there's a lack of volume, it's sometimes difficult to identify a pattern. But if I change this into a line graph, Jackson, you can see that there is a clear head and shoulder formation. And let me draw that for our viewers. I've got a massive left shoulder, a humongous head, and another right shoulder. And take note as well, Jackson, my 40-week moving average, that red line, has changed into a resistance. And that 40-week moving average is waiting at 35 cents. The share closed yesterday at 34 cents, so it's just below that 40-week moving average. The negativity around that head and shoulder formation will only be confirmed when this neckline, and if I project it, it's sitting there around 32 cents. When that level changes into a resistance, the formation, the head and shoulder on PPE on the Purple Group will be confirmed, and that means it's all hands on deck. And now then the big test is, will the share find enough buyers to lift it out through the negativity? And that will only be when the share can manage to trade above 35 cents again. Then the formation becomes obsolete, you can wipe it off the table, and then the momentum can hopefully take the share to higher levels again. So above 35 cents, sigh of relief, you'll be happy with your investment, but below 32 cents, that possible head and shoulder formation can take the share a lot lower, even lower than the previous strong support they're waiting at 24 cents.